What's going on, guys? This is the Chapel Trader, and today I'm just going to be going over how to do a very important skill called the top down analysis. I'll have that put up on the screen. Top down analysis. And this is important for a number of reasons, but primarily it's important because you want to be trading with the trend. You never want to be trading against the trend. This is why a lot of people have really low win rates because they take counter trend trades. They take really silly trades that are not going to benefit them in the long run, especially if their goal is to be consistent long term. So here's how you avoid that. You do what's called a top down analysis. And what this consists of is basically going through each time frame that's listed up here and just determining the trend. So since we're already on the monthly, let's begin there. As you can see, basically since October of 2 years ago, we see a very strong uptrend here. Very strong uptrend. We're seeing higher highs and higher lows. But then recently, we do see a bearish shift. Why is this a bearish shift? This is a bearish shift because this low that was just formed broke below this low right here. This low is now invalidated and a new one is being created. So while it may not be a bearish trend, it is a bearish shift. So we are going to go over here to our little text box and we are going to put in monthly. We're going to put bearish shift. Bearish shift. We're going to do the same thing on the weekly. So let's move this over. We're going to head down to the weekly. All right. So we're seeing something similar here on the weekly time frame. As you can see, we have a swing high, a swing low, a swing high, a swing low. I'll draw it out using this tool. Swing high, swing low, swing high, swing low. And it's going to create a swing high in about this range right here. So this is a bearish trend. And you may be looking at this and saying, but wait, we have a large bullish candle right here, and we have a large bullish candle right here. This is still a bearish trend, guys. Why is it a bearish trend? Because I'm not taking the outcome of one or a few candles to determine the trend. I'm taking a larger picture. And as you know, a trend consists of higher highs and higher lows. Higher highs and higher lows. That's what a trend is. This little bullish candle that we're seeing here does not change the fact that overall this is a bearish trend. So right now on the weekly, we are going to classify this as a bearish trend. Bearish trend. Let's go down to the daily and do the same thing. All right, so now we're seeing something very, very interesting. We are going to use our tool here. For a while, actually, we are seeing a very strong bearish trend. It goes all the way down here, goes back up to this high, creates a swing low. And right now, what we're seeing is this is clearly going to create a swing high above this high. So let's just pretend that there is a lower candle right here so that we can mark that up right there. The reason why this is a bullish shift is because this high that's forming has superseded that high right there. Do you see how this line caused a break in this horizontal line right here? That is why this is classified as a bullish shift and not a bullish trend, because the trend is bearish, but what's happening is a bullish shift, which can potentially turn into a bullish trend if this was to occur. Make sense? So that is why I'm classifying this as a bullish shift. So we're going to go down to our daily. We're going to call this a bullish shift, not sift. Let's go shift. There we go. And we're going to do the same thing on the 4 hour. We do this all the way down to the 15-minute. Now, the 4 hour is looking a little bit rangy. Not terrible. It's been worse, but it's looking a little bit rangy. But as of right now, what we're seeing is a very clear bullish trend. You're seeing a very clear bullish trend. And whenever this high is done forming, that's where this third mark is going to go. So as you can see, we have a low, high, higher low, higher high, higher low, and then this is a higher high. So this is a very clear, very clear bullish trend. And we're going to do that on the 4-hour. Bullish trend. All right, we're coming down to our last two. All right, let's go down to the 1-hour. All right, so it's looking a little bit rangy. All this right here is just consolidation. Everything that's within this box basically is just consolidation. I wouldn't pay too much attention to this. But what you should pay attention to is the fact that it broke out of this range. This is likely manipulation, this little downswing here. And then it shot back up, giving us a lot of bullish momentum. Now, this isn't a trend. It looks like it's about to be a trend. But as of right now, this is just 2 points on the chart. So I'm not going to call this a trend. So this is a situation in which I would call this a range, simply because the prevailing trend here was not even a trend. It's just consolidation. But we can expect soon that this will likely create a bullish trend. So right now we're going to go back and we're going to go to the text box and we're going to put range / bullish. And then we will do the same on the 15-minute to close it out. 15-minute, again, same thing as on the 4-hour. We are seeing a very clear, very clear bullish trend here. This is as clear as day. This is like a textbook trend that you see that you would like to take trades on. So that is what we see on the 15-minute. And now let's go back to our text box and then put in bullish trend. Now, you may be asking, okay, well, what does this mean for me as a trader? This means that basically what you do with this information is if more time frames are bullish than bearish, you're going to be buying. If more time frames are bearish than bullish, you're going to be selling. So what does that mean in this scenario? Well, let's tally it up, right? So for the monthly and the weekly, those are basically the only two bearish indicators that we see. Everything else is giving us bullish intentions. So what does that mean? Out of the 1, 2, 3, 4, 5, 6 time frames we're using, 4 of them are bullish and 2 of them are bearish. What does that mean? You need to be looking for buy opportunities. No sells, no counter trend trades, none of that. Whenever you enter, you need to be looking solely and purely for buying opportunities. Now, I'm not going to go over how I take my entries in this video. That's going to be a different video at a different time. Right now, I just wanted to cover the simplicity of the top-down analysis and how it can and will improve your win rate if you use this framework as a guide when taking trades, as opposed to just seeing, I feel like a lot of traders just stick to the 5-minute and the 1-minute, and they see one big, bearish candle and then just think, oh my God, immediately we need to sell, while ignoring the overarching trend, which is showing clearly bullish, rangy but bullish, and so on and so forth. So you can definitely and should use this to kind of have a direction when you're taking your trades. And in doing so, you are going to 100% improve your win rate. If you guys want a video on entries, I can do that probably, today or next week or like whenever you want. But let me know in the comments what you guys think. Let me know how you determine in which direction you're going to be trading in. And yeah, that's really it for this video. If you guys have any questions, comments, concerns, I'll put my Instagram and email in the video description. And yeah, that's really it. I hope you guys took value from this video. And yeah, I will see you guys in the next one. God bless.